At Rohit Srivastava is founder and strategist at indiacharts.com. Rohit, great to have you with us here on the program. Thanks very much. So it's an interesting time. But first, I want to sort of ask you about the massive flip in terms of index shorts from FIIs. You know, on end of day on Wednesday, that number was about 5,000 contracts, right? That's now almost 2.97, almost 3 lakh net shorts in index futures. That is substantial. Is that, would you reckon that's largely hedging? Is that, and somewhat, of course, expressing a view as well? Just start there, Rohit.
Yeah, so there is some expression of view, which means possibly the FIIs see some risk. Remember that FIIs and clients are at the opposite end of the stick, and the client side positioning also is similarly gone up. Now, there's something peculiar about this positioning shifting, very, very fast from one side to the other, not just yesterday, but it's happened a couple of times since March. You saw it suddenly go to the long side, then to the short side, then to the long side. And this is the third time we are seeing it gyrate, and probably this one is the fastest. Last time it took 2 days. This time it's like 1 day. Why is it happening? Maybe they are just knee-jerking with every swing of the market. If I compare this to previous elections, what we had seen both in 2014 and 2019, both which were BJP wins, was that the FIs were positioned on the long side. So they're betting on, the continuity part, and that sort of worked out. It's only when they had excessively long positions, the market did pull back even then, but eventually rallied higher. So at the start of this month, we actually had the same situation. You had FIs being short, and that caused a rally because there was short covering. But once that covering is done, we are once again seeing, downward pressure. So what is it that is, concerning? I think possibly this is just a bet on this becoming a non-event because, and by non-event, I don't mean a complete loss, but possibly that, the numbers are very similar to the previous time. You may not see too much change. Maybe that's the bet, and which is why, markets, if they have priced in a very big number and maybe if it's not going to happen, that is what the market behavior and the positioning may be suggesting in the very short term. But what people should also pay attention to, because like what I said in the beginning, that when you get extreme positioning, you also get trend reversals. And we may not have reached the highest short from FIs, but this is, I think, the fourth highest and also the highest since October. That means 2nd November, I think, was the peak point where you had almost 3 lakh, in fact, 3,50,000 contracts short. Now you're almost close to 3 lakhs. So this is the highest since, the 2nd of November, 2023. That resulted in that big rally where, Nifty went from, almost just below 19,000 to 22,000. So that was a big move. Now, if after or around the election dates, once all the uncertainty is done, if we do see this positioning still at an extreme, then we would take it as a bullish signal. But as of now, because we are still ahead of the results, it looks like a bet on the event itself and becoming a non-event or slightly negative in the sense that, oh, you didn't achieve the big numbers. But medium to longer term, markets always like stability. We spent all of the 1990s waiting for a stable government. And now the only thing markets want is, as long as there's stability and there's continuity, we are okay in the medium to long term. But short term, I think it signals some volatility on the downside because of maybe the numbers won't be met type of thing. But eventually, if that results in a excessive short position, then it will also, give us the reversal that we want medium to longer term later on.
So this kind of ties in with what others have said, that a victory is kind of priced in. So then what? Then after that, so maybe you kind of taper off a little bit, right? That's essentially what you're also saying from a FI and index futures positioning point of view. That seems to be the more.
It's like the buy on expectation, sell on news event.
Right. But nothing. You wouldn't see this as some have pointed out, expression of a view about the number itself, like pre-positioning for that. Pre-positioning in some way, but nothing very large in that sense, right?
Yeah, I mean, they had it right. If I go by the history, FIs were long the last 2 times. They had it right in the near term. Though on the event day itself, after the event day, we actually saw a dull market in 2014 and 2019. So that is where the option traders basically get killed in all of this. because the VIX collapses, right? Right after the event, what happens is the VIX has moved up, almost doubled over the last month, simply because of pricing in market volatility on the event day. And then when the event comes and then the volatility collapses, basically you don't really make much out of betting, one way or the other on the event. The real money gets made only after that, once the markets start developing their own trend. So it's good to really wait this out because at least for option buyers, this is not a great time. Probably sellers have a better, outcome here. So maybe spreads like is what people would consider, where they buy a call, sell a put, and that those kind of spreads would actually be better off, because at least you will earn the premium and cover your risk of options decay.
Okay.
But overall, yeah, it results in nothing. Short term, it's just a bet on that. Yeah, if things are just you don't get a very big number change, then market sell off because people just book gains that were based on this.
All right. Hi, Rohit. Good to hear your thoughts this morning. Thanks a lot for joining in. Well, someone asked what's going to take this market higher if the outcome is favorable. It'll be the FIs. Aggressively net short, they get stumped on the wrong side. And the flows as well have been lacking in the past 45 days or so. So let's see how that goes. But since we were talking about the option strategy, if you could fill us in with our strategy, if it's possible, and also the VIX movement. In a matter of a month, it moved from what, 11 to around 24 odd. In the past as well, I recall even in 2019, we did see this happen. And then it cooled off. A quick comment there.
Yeah, so the numbers, so the change in VIX was very similar. The numbers are different. Like last time, it would have gone from 14 to 28. This time, it went from 11 to 24. So sort of a doubling in the VIX ahead of the event is normal. So it's the same amount of change. It's just that last time you went to 28, 2014, you went to 35. But post the event, in the next 3 days, the VIX came off very sharply. It took 3 days. In fact, I just checked that it took 3 days to come off and then almost halved from there. Like it went back from 28 to 14 eventually. And so that is the option loss. So when you're going to see that kind of an option loss, when you do some kind of a spread strategy where you're actually selling a call or a put versus what you're buying, maybe you buy one call, sell two puts, those kind of strategies actually do better. Or at least hedge you to some extent on the option buying that you do. So you don't really lose much. If there is a move, you have something to gain on the spread. And if it doesn't move much, your loss is limited by the premium decay that you actually get on the option. So that's how one has to think about it.
Okay, thanks a lot, Rohit, for joining in. And a lot of volatility ahead of the election results.